This is Shelley Craft coming to you live on SNNLive. We're at the Sprott Natural Resource Symposium 2017 in Vancouver. I have with me William Lamb, Lucara Diamond. It's a publicly traded company, and the symbol is LUC on the TSX. Welcome to SNNLive.
Shelley, thanks a lot for having us.
It's good to have you. Now let's get started for our investors with an overview on the company.
Okay, so Lucara is we're not really junior anymore. We've been in production now for 4.5 years. Our key asset is the Karowe Mine in Botswana, and we started production there in 2012. It's been a phenomenal run for us, and I think as we go through this interview, I'll be able to explain a lot of exactly what makes this asset in Botswana just so exceptional.
Botswana diamonds, history. Tell me about some of the findings that you've had.
Okay, so just a little bit about Botswana. They've been mining diamonds now for more than 40 years. And the asset which we are mining was originally explored all the way back in the late 60s, early 70s. But no work was really done on it for almost 40 years. A junior company, African Diamonds, did some of the preliminary exploration, and then we picked it up from them in two transactions in 2009, 2010. So we put it into production. We started off the same as what most juniors do when you start off production, a little bit shaky. And then we started to mine in what we call the center and the south lobe, which constitutes about 95% of the reserve, which we mine open pit down to 2026. And I remember getting a call from site, and they said, we've recovered something special. And obviously, you get a bit excited. And this was in March 2013. It was a 239 carat diamond. So just in terms of context, when we look at the recovery of a 100 carat stone, 100 carat stone being about that size is quite significant. In context, when we talk about the recovery of 100 carat stones, they've been mining diamonds in the Canadian Slave now for the better part of 16, 17 years. And in most probably 250 million carats recovered, they've pulled out 2 100 carat stones. So our little mine down in Botswana, we produce less than 0.3% of global production. So it's really nothing. And over the past 4 years, we've now exceeded 140 stones larger than 100 carats. It is unbelievable in terms of the revenue which this mine can generate.
What is the reason behind this? I mean, is this one of those totally unusual finds that, I mean, did you go into you went into an older mine and you used new technology? I mean, fill me in.
So this is a brand new mine. It was a greenfield site when we acquired it. There was obviously just 2 trenches where they did the exploration. And from the exploration results, there was an indication that there was the probability that there'd be large stones. And you could see that by the breakage. But the technology that they use for the recovery of diamonds during exploration doesn't look for the recovery of large stones. They're just looking for carats. And oddly enough, when De Beers did the original exploration, there was a fairly large amount of breakage. But as we've now gotten into the true guts of the resource itself, we've adopted brand new technology never used in 100 years of diamond mining, for the efficient recovery of value. So when we look at how we actually operate the mine, we're not mining diamonds per se, we're mining money. And everything that we do is how do we reduce costs and maximize revenue. And that's how we've actually approached it. Using the XRT technology, we've taken away some of the very expensive unit processes which everybody else uses. Down to where you'd normally have 6 unit processes, we can now do it in 1. Far more efficiently at much higher throughputs, but it also protects the integrity of the stone. And what people don't realize is when you have a large diamond, it's a lot easier to break a large diamond than what it is to break a smaller one. So in November 2015, I always get calls from site. This is 2 o'clock in the morning. So straight away you think that it's something bad. And our chief operating officer says to me, are you sitting down? And of course your heart just sinks. You think that it's something bad. And he said to me, congratulations, Lucara is the first company in more than 100 years to recover a stone over 1,000 carats. And even now it gives me goosebumps. And so it was,
What's that worth in today's money?
I wish I could tell you, because we haven't sold it. We're finding that, and everybody says to me, well, we'll just find a buyer for it. And when you're looking at sort of, maybe to put into context, the next day we recover an 813 carat stone. So that's number 6 on the world's largest. That one we sold in May last year for 63.1 million US. That's for a diamond. It's most probably about 7 centimeters by 5 by 6. It's just this big block of diamond. So when you now have something which is almost 300 carats larger than that, to find somebody who has the free cash flow to pay $60-70 million for a rough diamond without understanding truly what the outcome from the stone will be when they polish it, it becomes a fairly challenging thing to sell. People say to me, well, there's lots of people out there. Yes, there's lots of people with a lot of money, and they can go out and they can buy a Porsche or a Lamborghini. But there's a big price difference between a Lamborghini at 250,000 US and a rough diamond at 70.
So I think the last time I saw you was about 2 years ago. So what's happened? You know, it's almost like ludicrous for me to ask that question after these big diamond finds. But what's going on basically in the company that you'd like to share with us as well?
So, Shelley, I think one of the very important things is, if I look back at the history of Lucara, when we got to a cash balance of $100 million, which was in 2014, our share price just stopped going anywhere. And when we went back out to investors and we spoke to them, asking them, well, what is it that you guys are concerned about? The first thing that they said to us, what are you going to do with the money? And everybody was concerned we were going to take this money and waste it, which I think that it's a general trend. People go out and they now have had this windfall of cash and they look for something which is potentially just going to add to their portfolio, but is not going to be value accretive. And what we then did is in 2014, we implemented a dividend policy. And I think it's one of the things that Lucara needs to be very, very proud of. In the past 3 years, we've now paid out more in dividend than the entire sum of equity we ever raised to buy and build the project. But there's another step on top of that. If you go back and you have a look at our balance sheet once we'd finished the construction, we had $58 million worth of debt. And since then, we've actually, with the implementation of the new technology, we've added about another $70 to $90 million worth of additional capital into the project. So if we look at the free cash flow ability, we've now sold $1 billion worth of diamonds, and it's generated more than $400 million worth of cash, which we've used either cash balance, dividend, or in upgrading the project to make sure we maximize our value recovery. So the way we've actually approached it is all around how do we add that value back to shareholders. And it's everything that we do is hopefully adding money back into the shareholders' pockets.
Let's talk about the resource and the life of the resource, and potentially, you know, is there enough to keep you busy for a while?
So we have, the reserve will be mined open pit down to about 320 meters. We complete that in 2026. And it's good that you asked that question because we've just finished a 10,000 meter deep drilling program. This is to convert inferred resource from 400 meters down to about 650 into indicated. That gives us sufficient reserve then, or indicated resource on which to do an underground study. So I was actually down in Southern Africa last week meeting with the contractors. We're going to put out a preliminary economic assessment first and then follow that up with a little bit more engineering to get to pre-feas. And we expect the PA to be done early in the fourth quarter of this year and then going into the underground pre-feasibility level early next year.
I imagine that investors question the political stance and the safety in Botswana. Explain to me what's really going on in Botswana.
So I'm sure that you would have heard Botswana, they refer to as the Switzerland of Africa. If we look at the political climate, they've had independence since 1966. The same political party has been in power since independence. And we speak to people there and they say that there is growing support for the opposition. So you say, well, what are the opposition's policies? And they say, well, they're exactly the same as the ruling party, it's just that they're different people. It is truly a blessing to be able to work in an environment where the government actually works alongside you. They know that they need the foreign investment to drive the economics of the country. And when we look at diamonds and how important it is, it's most probably 30% of their GDP. So the government really knows that taking care of the mining companies who are willing to invest in country is critical for their own success. So
William, what's your background?
So I'm a process engineer by training. I've actually been in diamonds for 23 years now. So a lot of that time spent with De Beers. So sort of I think we always have to thank De Beers for what they've actually done for the diamond industry, and I'm part of that growing level of experience which is now out there. I've been with the Lundin Group and Lucara Diamonds for just under 10 years now. I'm very pleased to have been able to take a lot of that knowledge with the management background that comes with being in the public space and being able to add value back to shareholders utilizing that experience.
Let me ask you, what was it like to go from the giant De Beers to a small company like Lucara?
Well, for the first 2 years, I was the only employee. I did all my HR meetings in the washroom, talking to myself. But I think the value that De Beers gives is in a certain sector. Working for a public company, you get such a broad area of diversity in terms of what you actually have to cover. And the experience working for a public company is unparalleled in terms of the growth and the learning opportunity.
Let's get your website out there for more information, if you would.
Okay, so if you want any more information on Lucara, our website is lucaradiamond.com. Lots of information, lots of pictures, big diamonds, small diamonds, colored diamonds. Don't show your spouses. But I think there's lots of value to be gained in going to have a look at the website, our social media. Everything can be linked from that website.
Ladies and gentlemen, William Lamb, Lucara Diamond, publicly traded company on the TSX, and the symbol is LUC. I'm Shelley Kraft, this is SNNLive, and we're coming to you live from the Sprott Natural Resource Symposium 2017 right here in lovely downtown Vancouver. Thank you so much for coming on.
Shelley, thank you very much for your time.
My pleasure.